Good morning, fellow option traders. This is Jeff, and welcome to the daily scan for Thursday, June 13th, 2013. Looking at our announcements for today, we have jobless claims at 8:30 and retail sales at 8:30. Those could have, depending on whether they meet expectations or disappoint or are positive, could have an effect on the market. Import and export prices at 8:30 as well, and then at 10 o'clock business inventories. And not much else. Some bond auction announcements, but that's about it for today. And if you understand this stuff down here, more power to you. Okay, let's take a look at what's going on in the world this morning right off the bat. We're looking like as though we may gap up at the open yesterday, and then things just turned ugly. So let's take a look at the ES, which is the E-mini futures. We'll take a look at that particular chart coming up here. ES, not looking real good the last 3 days, and that includes today because that's already trading for today to a certain extent. Not trading real heavily, of course, but still trading. So we get a candle for today, the 13th, and it looks like as though this level right here is kind of a key level. If we go below, if we get into the 1500s, there's not much to stop it until we get to, well, let's say here 1581. So that would be a level that we would be looking at today to see if we're going to go down there and touch that. So just to be for fun, I'm going to set an alert there, because I've been pretty busy lately and not able to sit here and watch what's going on. So I'm going to set an alert there, and that'll be the level that we will be watching. This was resistance before, so a lot of times it tends to be support when something's on its way down in a pullback. So we'll see if that is in fact there. And this is where my my pretend contract is here on the ES that I bought back here. Exactly what date I don't know, but around April 22nd was when I entered into that one, at least that week. So we'll see what happens with that. Here's something interesting that I wanted to show you, was the Nikkei. It's showing down 3.34% today, but if we go over here and take a look at here, it says during their trading session it dropped 6.4%, and I believe it's probably down another. I'm not sure exactly how the times work when I'm looking at this, but it looks like it dropped some more. So I kind of go by this, and then I click on the Asia over here, and here's the Nikkei, and it says 6.35%. So it says right now it's at 12,445, and we are currently at 12,725. So kind of pulled back a little bit from this low here. So things are not looking good over in Asia. So how about for us? I mean, that really overall is the most important thing. So what I'm looking at here is not feeling real bullish on the market right now. I'm feeling kind of bearish. So what do I have here? I have some positive delta trades here that are bullish trades that I am thinking of just bailing on today if things keep looking bad. The only bearish trade that I have right now is LinkedIn, which is this bear call. Then we have the insurance policy down here, which is we'll cover in a second. So Amazon is okay. If I were to take a look at Amazon, we're okay. We have a lot of room here on this iron condor. As a matter of fact, it can, it can move pretty significantly, and this is where things would look the best for us if it moved down to like 256 or so. So it's got quite a ways to go. That's $20, $15 to $20 or so on Amazon. So I'm not concerned about that one. But where I am concerned, of course, is on Chipotle, which is in negative territory right now. Google, which is moving and trying to go negative on me. Goldman Sachs, which is negative already. And Netflix, where we exited the let me go over to Netflix here. We had this June 2 bull put here, and I bailed on that. I got out, took a little bit of a loss, and we still have this one here, but it can move very quickly. Netflix can. If you look over here, this was resistance for quite a while, this level, the 190 level. So we just need to be careful with that. So I'll probably be getting out of all of those today, and let's take a look at our Russell cash index position that we have. And we're almost right at one of the calendar's strike prices here, but let's take a look at the risk profile. So remember, there was a while there where our peak was below 3,000, and here's where calendars take advantage of increasing volatility. Now you can see that this peak has moved up, and it is now at 3665, whereas before it was just below 3,000. So the peak and the valley here are both moving up right now as the market drops. So what we wanted to do was take advantage, if there is a pullback, is take advantage of price as it moves through the tent here. And the white line will also move up quicker. It'll be pushed up as volatility increases if the market keeps dropping. So somewhere along here we may end up, depending on timing or whatever, if the market keeps pulling back, this could be a very attractive trade. And that was a good insurance policy, and I'm very happy with that, and feeling kind of smug about it too. But you could be burnt, but I'm happy that I have that insurance policy, or that hedge, you could call it, I guess. Alright, so what I want to do now is I'm going to run through the A+ list. I don't want to look for really any bullish trades. If I see one that looks like it might be bullish, I'm probably going to take a pass on it. So we'll start out with our old friend Apple here and see what's going on. Alright, we have a pretty flat moving average. We've mentioned that before. We don't have an entry if we wanted to go short or do some sort of bearish or bullish trade, bearish trade on this, like a bear call of some sort. So we need to wait for our entry signals, and it's just not there on Apple right now, even though I'm pretty sure it's going to pull back significantly. Amazon, I think all these are going to pull back, but this one actually here, this could be if the market continues, this could be a nice bear call on this one. Let's just take a look and see what kind of prices we could get on this. If we were to look at regular July expiration, something with a delta of 20 or so, or we would be at the 290 right here. That has a delta of 22, so 290, 285. Let's back out a little bit on this one. It never reached 290, and as a matter of fact, that's where our strike is on our June iron condor. And try to get past that previous high. We hit some resistance here on the weekly. Amazon is looking real good here, even though the moving average is moving up. This is something that I would be interested in getting into. So here goes an alert here. That one's on tap for today. I find this kind of interesting, this alert here at 282.50, where I was going to bail on the iron condor. I can't get to it here, but it's at 282.50, and the high here was 282.47, so it just missed it by 3 cents, and that alert would have triggered, and since then it has pulled back. Yeah. High here is 282.47. If you look in this box here that says H, and we rest our cursor on that calendar, we have 282.47 for that high. Missed it by 3 cents. So we'll see if we can get in here with a bear call today. BIDU. Alrighty. BIDU also, it is in a long-term downtrend, even short-term it's uptrend. But let's take a look here also and see what we can get for around a 20 delta. And see, the prices here just, when you get a stock that's priced down around here and we have $5 spreads, you're going to have a hard time finding something that, at times, depending on the price, something that's around 20. So assuming that price continues to move down and this strike here at 105 starts to move towards the magic 20 delta, 105, yeah, that's above the previous high, so that could be attractive as well. So I'm going to put an alert in here. I don't want to alert everything, but this one would be a good candidate because long term we're in a downtrend. We have a downtrend here, we're down here, and down on the stochastic we got our hook. So that's what we're looking for. So that one looks pretty attractive. Alright, CELG. This moving average is rolling over, and here we have several weeks of price moving in the negative direction, negative here, and possibly rolling over here. We have a hook there. I don't want to get too many, but I do have some money to spend, so we're looking at a 130 strike on CELG. It's a little shaky looking, but not too bad. So let's set an alert here on this one. And that's where we're headed with it. Okay. CF. We just got out of that one recently. Whoa. Yeah. That's a big bar. Had a big day yesterday, big day the day before. CF is very dependent on the market because it's sort of more or less a fertilizer company, and if the economies of the world are slowing down, it's very sensitive to that. So this one's kind of a chase. I wouldn't go after this one right now. We didn't get our hook above the 80 line here on %K, so we're going to hold off on that one. However, well, I mean, if you want to just buy a put and at the money put on this and see if you can ride it out, I wouldn't advise that though. Just thinking out loud. That's all I'm doing. Alright, Chipotle, wouldn't really bet against this because we're looking pretty positive here. This is a very steep moving average, and it's going to take a lot to beat that one down, even though on the long term, MACD is still above zero, and the short term MACD just went below zero, and actually we got a hook up here on the weekly. And this one, I don't know if I'm going to exit this today or not, but I'm going to put an alert on here to exit, not to enter into a trade, but to actually exit if we go below there. Okay, moving right along. GLD, we got out of that one yesterday, I believe it was. Was it GLD? Yeah, I think it was yesterday. So we made some nice money on that, so I'm going to take that out of here. So what are we looking at for today? No entry, even though it's in a heavy downtrend, there's no entry. I believe that if the markets turn sour, that gold is finally going to start to turn around and come back up, no matter what some of the experts might be saying. It's just the way that I'm feeling about it. Looking long term here at the MACD on the weekly chart, we have short term moving up and the long term moving up, so we have some movement towards a positive momentum on GLD. Google, charts are slow today, very slow. Alright, Google, we could just flip on this one if we wanted to, although we just started to get some downward on the weekly. That's a pretty good indicator, has been historically, looking at price movement here and the MACD here and the MACD here. This would be a good one. We could just flip around on this one. So I'm putting an alert here, and that's to exit my bull put and get into a bear call. Okay, so what prices might we be looking at there? Wow. We go all the way here to 930. Wow. Yeah, that'd be sweet. I would say you could go to 920 on this one. If we were to go to 920. And you see why I picked the 920 is because that's the high. 920.6. Is it going to hit that? I don't think so. And Google's been not getting very much positive press lately. So this is looking really good. This 920, it's $1.26 credit. Very, very attractive. And we have our alert set here, and I'm going to just move that up just a hair. And so when this alert triggers, I'm going to exit this June bull put and jump into a July bear call. Probably kind of heavy too. Maybe with more than my typical 4 contracts, maybe 6 or 8, somewhere around there. This one is really looking good to me. Sorry about that. Goldman Sachs. I'm just, what I should do here, I think, is I have 1, 2, 3, 4 candidates for today. Goldman Sachs, not looking weak enough yet to get in there. Even though short term, I'm seeing this nice little hook here on %K. Not interested in going with a bear call on that LinkedIn. We're already in short on that. I think that's going to be a good trade. We pulled in an 84-cent credit on that. You see, this is what I started doing here, is putting down the amount of my credit so that I can just look at the chart and say, okay, where's it at now? And where's my 80%? MasterCard, it was looking bearish yesterday. We didn't get a hook above 80. We did get it above 45. This could be a secondary entry. We are moving down on the weekly, moving down on the daily. This looks like this. It's kind of following the market too. But I think that this would be a good trade for July at 20, at a delta of 20. We would be somewhere around here, let's say 585, because if it moves down today, that 24 delta may move down into the 20. So at 585, our high is 589. I think that that would be a pretty safe trade. So I'm going to jump in here on this one too. I have an alert set on that. Let's see. This is going to be close enough. And we'll set it there. Okay. We have an alert on MasterCard. And I am going to stop the scan there. Just because, well, we're running pretty long. We have plenty of candidates for today. And it's going to be a really wild and crazy ride, I think, that we are coming into the I guess you could say market correction. So that's it for today. Hold on to your shorts. Thanks for watching. Have a great day and happy trading.